Today's highlights: with stablecoin inflows cut in half, can Bitcoin reverse its weakness? The Fed will only cut rates once by 2026 and plans to buy $40 billion in bonds. Can this stabilize investor sentiment? A 10-6Z is holding down AI. Can the data goldmine that Bill Gates talked about really be mined? It's Wednesday, December 11th, and this is the BTV Chinese channel. Where is B-Face? I'm Michael, greeting you from Dubai. Let's first take a look at Brother B's most important 24-hour data summary. Bitcoin has been dropping like this lately, and if we have to find a reason, it's not that the market has turned bearish, but rather that the market is out of money. Let's take a look. Stablecoins are the lifeblood of the entire crypto market. So what happened? Since August, the 7-day average of stablecoin inflows into exchanges in 2020, it dropped from $158 billion to $76 billion. This isn't just anemia, this is losing half the blood. Even the 90-day moving average fell from $130 billion to $118 billion. So the market is signaling that there's a long-term liquidity shortage here. Of course, without money, don't even think about forcefully pushing Bitcoin up. Occasionally, Bitcoin rebounds, right? That's because there are fewer sellers, not more buyers. So don't expect bullish news to magically start a bull market. Only when stablecoin flows return will the market have fuel and the bull market have hope. Until then, Bitcoin can only bump its head against the ceiling of liquidity, sighing as it goes. Let's take another look at Bitcoin's realized profit and loss ratio, the NUPL. We've focused on this metric many times because it's a key indicator distinguishing bull and bear markets. Right now, this number is 0.39. It looks pretty bleak, as if the market is done for, but it's actually right in the overall profit zone. What does that mean? It means a lot of people have no intention of selling their holdings. They're holding on tighter than anyone. Historically, this range has never been a signal for a crash. Instead, it's more like a phase where big players quietly accumulate and build up their positions. However, considering that the current market is stuck right at this awkward spot between bull and bear phases, neither up nor down, most people are just waiting for the story to take a turn. So, before the trend reverses or gives a clear direction, any additional buying should be done cautiously, with risk control as the top priority. Otherwise, during these periods of volatility, we could get caught off guard at any moment. Looking back at past cycles, as long as the NUPL stays in this kind of low but not panicked range, most of the time it's actually a good opportunity for medium-term positioning rather than a time to flee or go all in. Right now, it feels more like the market is playing dead to test your patience, not to scare you into running away. What you really need to avoid is getting shaken out of your position by this round of boring, choppy market action. Now let's look at Ethereum's leverage ratio. The ELR has reached 0.579, which is a historic high. To put it plainly, the entire market is now relying on leverage to keep things afloat, and derivatives are growing even faster than spot positions. This means the market is being stretched thinner than glass, extremely fragile. As soon as the price moves even slightly, there will be a wave of forced liquidations. It's like a domino effect. One explosion triggers another. So Ethereum holding above $3,300 right now seems impressive on the surface, but if you look closely, you'll realize that what's really driving the price up isn't buying pressure or new money coming in, but rather a bubble being forcefully pushed up by leverage. As long as it stays stuck at these high levels for a long time without coming down, if there's ever a pullback, it will turn into a direct critical hit. On the other hand, if the price can keep rising while leverage steadily decreases, that's what a truly healthy rally looks like. So right now, when watching Ethereum, it's not about whether the candlestick chart looks good or not. What you really need to watch is whether the ELR is high. This indicator is like Ethereum's heart rate monitor. If it beats too fast, it's only a matter of time before it collapses from exhaustion. Alright, please give us a like and turn on the notification bell. We're here to help you sort through the Web 3 world's news that's closest to making money in the past 24 hours. And we also hope you'll consider becoming a member. Today is Thursday, and at 8 p.m. sharp, we have our regular members-only live stream. We'll be discussing topics you care about and talking about the journey of gradually becoming wealthier. Alright, for today's top news story, let's focus on one thing. Will the Federal Reserve actually cut interest rates in December? Now that we're already in December, and we're here in Dubai, at the whole Binance Blockchain Week, the Bitcoin MENA, and the FinTech conferences, I've noticed that not many people are talking about rate cuts, not much talk about Wall Street's mood, and not much discussion about how many dissenting votes there are at the Fed. That's because everyone feels that this massive money printing machine has already started to warm up, and cutting interest rates is just one of their inevitable options. So the market as a whole believes that this huge machine will definitely restart. Everyone is both excited and afraid of being wrong, so they're all watching the Fed without blinking.
Suggests that the outlook for employment and inflation has not changed as much since our meeting in October. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals, considering the balance of risks to employment and inflation.
This time, the interest rate was cut by 25 basis points, setting the benchmark rate at between 3.5% and 3.75%. While seemingly calm, undercurrents exist. 3 committee members unusually dissented, revealing Fed policy divisions. Crucial is the guidance of the dot plot, which indicates only one rate cut in 2026, 25 basis points. This almost explicitly tells the market not to expect continued easing. This means that over the next 2 years, the consecutive rate cut cycle the market has been hoping for will not materialize, and the pace of declining funding costs will slow significantly.
Today, the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. As a separate matter, we also decided to initiate purchases of shorter-term Treasury securities. This is solely for the purpose of maintaining an ample supply of reserves over time, thereby supporting effective control of our policy rate.
The Federal Reserve has launched a reserve management purchase program, planning to buy $40 billion short-term Treasury bonds on the secondary market and continue monthly. Wall Street views this as implicit easing, seeing it as the Fed injecting liquidity and backstopping the market.
So the Fed's stance determines the trend in the crypto market. You can see Bitcoin surged to 94,000 and then dropped back to 91,000. The same goes for Ethereum. First it soared, then it plunged. What's the issue here? It's the signal about rate cuts this time. The Fed's message is particularly subtle. They don't dare to unleash massive liquidity, but they also can't let the market go thirsty. It seems like the tightening is almost over, yet they insist on maintaining an excited but cautious dovish effect. Inflation is coming down, the economy is holding up, but they just won't give a clear direction. To sum it up in one sentence, this time, it's not a shower of red envelopes, but rather a cautious sense of hope. But it's definitely not bad news. So what should we be watching next? We'll need to look at the statements on employment and the economy in the US. As for the real drama and volatility in the market, it might just be in the brewing stage right now. We're currently in Dubai, and right now the UAE is hosting a FinTech Summit, which is a conference on technology and finance. But at this conference, the amount of discussion about AI is extremely high. And what you probably wouldn't expect is that many business owners are most concerned about who can turn the mountains of PDFs and piles of paper documents, the so-called junk, as well as all kinds of videos and audio files, into their company's secret to wealth. They all believe that within these materials lies a vast amount of intellectual property, or perhaps some new business growth opportunities they've previously overlooked. So in the future, especially with AI, will operating systems be able to turn trash into treasure? Could this be the next trend in the development of AI operating systems or AI applications?
Business growth is undergoing an AI-driven paradigm shift. Systems like CRM will upgrade from passive record-keeping to active workflow engines. AI will not only be able to automatically execute tasks, but also anticipate processes in advance. In specialized fields such as healthcare and law, multi-model collaboration is becoming a trend. Contract analysis AI will be able to directly integrate with systems like finance, greatly improving efficiency.
AI is the biggest technical thing ever in my lifetime. I mean, it is so profound that its influence is hard to overstate, as is its economic value. This is basically intelligence. You know, you can get medical advice, you can get a tutor, or you can have someone help you design drugs. So the value is extremely high.
Content and software development will also shift from attracting humans to making it easier for AI to understand, reversing the focus of logic. In the field of health technology, investors have introduced the concept of monthly active users for health, and preventive monitoring will become a new engine for growth. AI can significantly reduce monitoring costs, and combined with new types of insurance mechanisms, companies focused on prevention and health services will experience explosive growth.
So the first thing about technology trends in 2026 is that AI is no longer just a lofty concept. AI is starting to get down to real work, helping everyone build virtual 3D worlds, set the rules, and letting you decide how you want to make money. Even things like personalized study plans and tailored nutrition can now be customized for individuals. What's even more remarkable is that some people have suggested that the job of an AI university professor shouldn't be to lecture, but to teach you how to collaborate with AI. So in the future, whether we're investors or retail traders, if we want to achieve results in Web3, we really need to pay close attention to how AI maps out our investment roadmap. Here, there are legends of getting rich overnight, as well as carefully crafted scams. This is a dark forest of chaotic development, but it also nurtures a lake of hope leading to the light. The ultimate destination of faith is freedom. The endpoint of consensus is equality. This segment of TV will guide you through the fog, help you see the future, and together we'll gradually become wealthier. From rat poison to a hot commodity, 60% of Asian billionaires are planning to increase their Bitcoin holdings. Why have Asian billionaires changed their attitude so quickly? Is the CRCL hype benefiting arbitrage-seeking banks, or is it about network infrastructure? Every year, we attend this conference in person, and every year, Bitcoin makes a qualitative leap. Just think about how harshly Bitcoin was criticized back in the day. Warren Buffett called it rat poison squared. Bill Gates said he was willing to short Bitcoin, and Jack Ma outright said it was a bubble itself. So, in the circles of the wealthy, Bitcoin used to be something so devalued that even mentioning it was considered beneath them. But that's where the drama lies. Recently, a 2025 Asia-Pacific high net worth individuals investment report was released. And in this report, all the Asian billionaires have collectively changed their stance. Bitcoin has jumped straight from the blacklist to the VIP investment lounge.
Asia, I think, is a very big player when it comes to crypto, and it's probably an advanced player. I think what happened in the US was the ETF, probably that, investors who still hadn't touched Bitcoin now have a vehicle to access it. There's an argument to be made that in Asia, many investors and family offices have already been in Bitcoin since the early days, since 2017.
Reports show that high net worth individuals in Asia are shifting cryptocurrencies from speculative assets to tools for long-term asset allocation. 60% plan to increase their crypto allocation in the next 2 to 5 years. The survey covered 270 high net worth and experienced investors with assets over $1 million across 10 Asia-Pacific countries. 87% already hold cryptocurrencies, with half of them having more than 10% of their portfolio in crypto, and the overall average allocation is 17%. Investment logic is also being restructured. 90% see crypto as a tool for long-term wealth and estate planning. 56% consider it a core component for diversification, and crypto assets are rapidly becoming institutionalized.
So this report focuses on the changing investment preferences of wealthy individuals in the Asia-Pacific region. In fact, their increasing allocation to crypto assets is backed by relevant regulatory support. For example, while the Monetary Authority of Singapore appears to have tightened licensing and raised the entry threshold, in reality, it is clearing out unqualified players, rolling out the red carpet for institutions, and giving the wealthy peace of mind when buying crypto so they can sleep soundly at night. Hong Kong is also stepping up its efforts. What's even funnier is that the children of the wealthy are nothing like their parents. They're digital natives, and they're actively pushing their elders into the crypto market. As a result, banks and wealth management institutions are being hounded daily by both the wealthy and their kids, urging them to offer a full range of crypto products as soon as possible. For example, just a couple of days ago, I registered with Hong Kong's HashKey, and it took a long KYC process before I finally got the qualification to operate the account. HashKey's number of compliant users has also surged by 85% year over year. So in short, crypto assets have been fully elevated from a side player to the main legitimate asset class. Their status is now secure, and liquidity will only get stronger. Just think about this. If the world's wealthy were to allocate just 5% of their assets into digital assets, just imagine how much that would boost liquidity. If you have doubts about USDT's redemption or its security, then you really shouldn't have any concerns about USDC. Right? It's a publicly listed and regulated company, arguably the most transparent and regulated network out there. However, Circle's stock ticker is CRCL. Its share price went from the bottom all the way up to $300, made a full round, and then dropped back near its initial offering price. Why is that? It's because when it comes to Circle, people have very different opinions about its valuation and its future. There are two camps with completely opposing views. One side argues that it's clearly building the next generation of on-chain settlement networks, serving as the open financial infrastructure, but the other side says it's just a stablecoin bank making steady profits from interest rate spreads. So should I value it as a bank, or should I project its future as an internet infrastructure company? Circle's stock price is constantly pulled back and forth between these two lines of reasoning.
Skeptics believe Circle's business model is highly dependent on interest rate spreads. If rates fall or costs rise, profits will be squeezed. Moreover, over 60% of profits are shared with Coinbase, and added pressure from IPO lockup expirations further destabilizes earnings. Some worry that if regulations change, Circle's current advantages may erode. Bulls bet on long-term cycle, believing Circle's lack of profit is deliberate, not weakness. They are sacrificing profits for scale, driving growth through subsidies, and competing for network effects with size. as long as compliant stablecoins experience explosive growth on a large scale, moving from $100 billion to several $100 billion, the controversy over short-term profits and valuation will eventually be overshadowed by the growth in scale.
So in my view, this argument isn't really about whether the stock will go up or down tomorrow, but rather about a fundamental question. Are stablecoins just making a living off interest rate spreads as a short-term play, or will they become the high-speed highway for capital settlement in the next 3 to 5 years? So if all you have left is the interest rate, then the current pressure on CRCR is far from over. But if you believe that global capital settlement will eventually move on-chain, then CRCL is basically among the first favorites standing at the entrance of the policy escalator. In the short term, stablecoins are actually facing quite a bit of trouble. Unlocking, profit sharing, profits and regulations can all trip you up. But in the long run, CNCL's moat is also very strong. The user's mental consensus, the compliant path, the scale of institutions and alliances, these are things others simply can't copy. So to put it simply, CRCR may not be the most aggressive, but its position is the hardest to replace. All right, that's today's quick report.
Starting from December 10th, the U.S. is accepting applications, $1 million for individuals and $2 million for businesses, to obtain U.S. residency. Simple and straightforward, one card, two prices. Whether you can get in depends on whether you have enough money and passion. Meanwhile, Yitanfang has quietly upgraded again. 1 is now live, with Boblob capacity increased to 15. Expansion doesn't require a hard fork. L2 can directly transfer bandwidth. In January next year, VPO2 will continue to ramp up, raising the bar again. According to Rapp's report, Galaxy is making another big move, setting up a new office in Abu Dhabi and launching a new business division, officially making the Middle East its next main battleground. A 16Z crypto is also taking action again. This time, they've established a new base in Seoul and brought in Summer Park to oversee Asian operations. The message couldn't be clearer. Not a single inch of Asia can be missed. According to the graph, the Chicago Board Options Exchange has given the green light to 21 shares, which means XRP is officially being put on the public track on Wall Street. This approval carries significant weight.
If you follow our weekly updates, you'll know that our community has already reduced more than 50% of our positions around the 95,000 mark. Now, we're basically holding about 30 to 40% of our positions, waiting to determine how to best add back in for the next market move. As for the future market trend, we need to approach it with respect. If the market reverses, you should exit as soon as you incur a small loss. Never try to average down and stubbornly hold on, or a small loss could turn into a major setback. However, in a bull market, blindly cutting losses will only make your losses grow larger and larger. There's one more thing everyone should remember: transaction fees. If you're someone who trades frequently, you must pay close attention to how much you're paying in fees, because these seemingly small gradual fees can eventually eat away all your trading profits, like a frog being boiled in warm water. This is called a small account, and you can't just add it up casually. So when facing trends, we must respect the market. This is something we should keep at the forefront of our minds. The market doesn't move up or down based on emotions, loyalty, or personal preference. Your loyalty and affection for any project will never be the reason it rises or surges. Please remember, we need to go with the market and follow the trend. All right, that's all for today's program. If you find value in the Zhuodong channel, please give us a like or leave a comment on our channel. Here, you can enjoy all our membership benefits, and we hope you'll consider joining as a member. This helps us make the channel even more professional, and we hope to lead our members to ride this bull market together and gradually become wealthier. See you tomorrow.